Welcome back, everyone. Next up, we have GABY Inc. It trades on the OTCQB under the symbol GABLF and on the CSE under the symbol GABY, and is a California-focused retail consolidator and the owner of Mankind Dispensary, one of the oldest licensed dispensaries in California. Please welcome its founder and CEO, Margot Micallef, Business Development and Capital Markets Advisor, Al Shagelman, and CFO, Paul Stacy. Welcome, everyone. How are you doing today?
Very well, thanks. Thanks, Anna.
All right. We look forward to your presentation. Take it away, Margot.
Thank you. We were having technical difficulties, so I'm not sure if Alex was able to join or not, but we're going to assume that he's on. Technology is not my forte. Yes, Alex, we can. Awesome. So you've been introduced to Paul and Alex. Paul will help us with Q&A. He'll answer all the tough questions, so I don't have to. And Alex will present our capital market situation, the opportunity to invest in GABY, why we think it's a good opportunity now, and he'll do that at the end of the presentation. So just a brief introduction to myself. I started my professional career as a lawyer with a large law firm in Vancouver. And then I got recruited to join a telecommunications firm in Canada, where I helped grow revenue from $200 million to $2 billion, primarily through consolidation. I then started my own merchant banking business and did 3 retail consolidations on my own. And then in 2019, I moved into the cannabis space to build a business as a legacy to my sister, who died from lung cancer. When she was first diagnosed, she was given 4 months to live, and she refused to accept the prognosis. So we tried all sorts of different therapies, including cannabis. She lived for 5 years and had really high quality of life. So I can't attribute all of her success to cannabis, but I know it had a part. So that motivated me to build GABY as a legacy to my sister. So what I'm going to do in this presentation is start off with a general primer on the industry for those who aren't familiar with the cannabis industry. And then we'll talk a bit about the opportunity, about GABY's operations, our strategy, and our leadership team. And then Alex will come on and talk about the capital markets. So we're going to turn our video off during the presentation so that we don't distract you, or more importantly, ourselves. And then we'll come back on during the Q&A. All right. So I'll just point out the disclaimer slide. I'm not going to review it. You've probably all seen it. If you want a copy of it, you can pull it down off our website. So as I said, a short primer on the cannabis industry. For anyone in doubt, the cannabis industry is here to stay. 77% of the US population live in states that have legalized cannabis in some form. And the remaining 23% have access through shared borders. And last year, or the year before, there were 135 bills passed to federally legalize or make cannabis more accessible. So it's moving in the right direction. It's continuing to grow, and more states are coming online. You can see the exponential growth that cannabis has had as an industry. The North American retail cannabis sales are expected to reach $25 billion by the end of this year, and then double in the next 4 years. The industry employs 440,000 people, which represents a number which equals half or over half of the lawyers operating in the United States, just to give you some context. The industry's been growing faster than comparable consumer products companies. You can see that it already surpasses Starbucks in sales, and it represents 2/3 of the size of the overall over-the-counter medicines category, and it's going to continue to grow. And now household brands have entered the market, brands like Heineken and Molson and many other well-known brands. They would not bet their brand reputation on an industry if it wasn't going to succeed, if it wasn't growing. By entering the market, they're legitimizing and destigmatizing the industry. So like virtually all consumer products categories, there's 4 verticals in the cannabis industry. It starts with cultivation, moves into manufacturing, and then goes into distribution, and finally goes into retail. Retail is the heart of these verticals, and it's the key to opening up the market to the mainstream consumer, which is the future of the industry. It's where consumers have their first experience and form their first impression. It has the highest margins, it's the most stable, and it's the least likely to be commoditized. Hence why we chose to be in the retail business. So let me give you an overview of GABY at a glance. We'll start with our Mankind dispensary. It's our flagship dispensary. It's our only dispensary at the time. We bought it in April of 2021, and it's going to form the foundation of our consolidation strategy. Over the last 12 months since we've owned Mankind, we've been restructuring and simplifying the operations. And through that experience, we built standard operating procedures, which we've now converted into an operations manual. And that's the Bible of how we will run Mankind and any future acquisitions. Mankind is also one of the highest grossing dispensaries in California, with over $1.8 million in sales per month. And that's 3.5 times higher than the average dispensary in California. We have 3 channels for shoppers to shop in. It's called the omni-channel universe: in-store, delivery, and curbside. And it's split about 60-40 in favor of in-store. We see about 25,000 customers per month. And last year we served 36,000 new customers, or roughly 3% of the San Diego population. Our differentiator is how we operate. Our goal is to normalize cannabis, and we use a self-serve model. You can see by the picture on the slide what I mean by self-serve. All the products are on display. It emulates the mainstream experience. When you walk into a Whole Foods, the products are on display and you can pick them up and touch them. You can compare them to other products. And that's what we're trying to do with cannabis. Most dispensaries have display cases where they display the product, and then you have to get in line and go to a counter to order your product. So we're trying to normalize the experience. This model works best for both traditional consumers, which are the experienced consumers, which are the predominant consumer in the market now, as well as mainstream consumers. It allows traditional consumers to walk in and find the product that they're looking for easily without waiting in line. And it helps the mainstream consumer to feel comfortable with the shopping experience because it gives them time to look at the products. And we've also got a very well-trained staff of sale consultants who understand the products. And that mainstream consumer usually walks in looking for an effect, looking for something to relax them or to help them sleep or help with anxiety, et cetera. And our trained sales consultants can direct them to the right product. So it's our differentiator, and we think we're winning with it. We are an award-winning dispensary. We were recently named San Diego's favorite dispensary. Our customers love us, as you can see by the number of stars that we get from various sources. And the kind of reviews that we get. I've posted 2 reviews on this slide. I won't read the whole thing, but I'll give you some of the gist of it. The first review says, "What a euphoric shopping trip. Move over Nordstrom. The bar has been raised for a top-notch consumer experience." The second one says, "I've been to many dispensaries. My experience at Mankind was very good. I will be back." And there are thousands of reviews just like that, and you're welcome to read them on the internet. A quick financial snapshot. We finished 2021 at just over $32 million Canadian in sales. That's about 25 million US. And that was realized through sales in retail, distribution, and manufacturing. Since then, we've closed down our distribution and manufacturing businesses because they're low margin businesses. We made a strategic decision to focus all of our resources and efforts on our high margin retail business. In 22, we expect to generate revenues at roughly the same level as 21, so about 25 million. But this time, all the revenue will come from retail sales, and those are higher margin sales than distribution and manufacturing. So we expect to see higher margins in 22 over 21. As I said, we're California focused. Let me explain why. California is the largest cannabis market in the world. It's expected to reach $5.6 billion this year and then grow to $7.2 billion in 2024. It's the 5th largest economy. It's also a tastemaker market, which means that whatever happens in California gets noticed in the rest of the United States, oftentimes in Canada and the rest of the world. That means that if a brand is launched in California, it's that much easier to launch that brand across the United States once legalization occurs. It's also a market that everybody has to enter, and the large multi-state operators have generally stayed away from California at the present time. Eventually, they will come into the market. They will look to buy a company that will move the dial for them, and we believe that GABY will be a good target. Even if we decide not to sell, or it takes longer for the multi-state operators to move into the state, we're building a company that is sustainable, that's growing, and that will be around for the long term. We're focused on California. California poses a unique opportunity. There are fewer than 850 physical locations in California. Most of them are small and independent. Those locations serve a population of 36 million, so that's 2 dispensaries for every 100,000 people. Washington, by comparison, has 10 dispensaries for every 100,000 people, and Oregon has 17. That emphasizes the opportunity for growth in California. There's also no household names, which means that no one owns more than 4% of the $5.6 billion California market. It's an industry plagued by inconsistencies due to being dominated by inexperienced operators. They have chronic out of stocks, insufficient capital to grow, or sometimes even maintain inventory levels. There's no consistency in product offering, and therefore there's no consumer loyalty, so it's hard to grow a business. There's a lot of dispensaries for sale. I would say it's a buyer's market right now. Many of them had a hard time during COVID and couldn't pivot. Some want to stay in the business but don't want to operate, which gives us an opportunity to use our shares as currency to buy their locations. Some want to remain in the industry but need help, which creates an opportunity to franchise. And you'll hear about our leadership team and understand our deep knowledge in the franchising industry. Given that we've created an operations manual, we're ready to take on acquisitions, whether they be acquired businesses or franchising. And to conclude, only 20% of municipalities in California allow cannabis retail, and that allows opportunities for us to apply for new licenses as more municipalities come on stream. And then finally, 2/3 of the sales in California are still done in the illegal market. So we expect to continue to see growth in the legal market as consumers move to the legal market from the illicit market. We've talked about the Mankind dispensary being the right foundation and retail being the opportunity in cannabis. We've focused on California and it emphasized that it offers the right opportunity. Let's look at our leadership team now. Starting with my experience, as I mentioned, after I left the legal profession, I joined a telecommunications firm. It was called Shaw Communications in Canada. And I helped grow the business from $200 million to $2 billion. And we did that primarily through acquisition and consolidation. We did about $15 billion in transactions, and I was involved in virtually every one of them. After I left Shaw, I was a co-founder of a company called Vista Radio in the radio broadcasting business, and we grew from 0 stations to 50 and grew EBITDA by 500%, oftentimes in the first 18 months of acquisition. After I sold Vista Radio to a private equity group, I moved into the domino space where we grew revenue 21% year over year to $215 million. And I eventually sold my interest to my business partner. I then moved into the Subway brand and grew the business to 840 locations, overseeing $450 million in revenue and returning an ROI to investors of 760%. So that's the foundation of our experience in franchising, but there's more. Simon Lalikas is our president. He worked with me as president of Subway for Western Canada before he took over the presidency of GABY. He has lots of experience in retail and in franchising. He's consistently grown revenue and returns to shareholders in every position he's held. He has lots of experience in building out locations, having started with Starbucks and been responsible for building out 200 locations in new and emerging markets. Paul Stacey, who's with us today, is our CFO. Paul has experience in both a COO and a CFO role. He has big company experience with companies like Nabisco and others, but he has also got small market and startup experience, having partnered with private equity to build out their startup investments. And he started his career at PricewaterhouseCoopers. John Butters is our Chief Marketing Officer. He's an entrepreneur in his own right. He brings a data analytics approach to marketing. In his first 10 months of joining Mankind in 2018, he helped grow revenue by 41%. We have a very diverse board. I won't go into each individual's background, but suffice it to say that they represent big company experience, entrepreneurial experience, cannabis experience, retail experience, e-commerce, HR and governance experience, legal experience, and finance and capital markets experience. So very well-rounded with the skills and commitment that a young company like GABY needs. Let's talk about the GABY Impact, what a good management team can do when given the opportunity. In the 12 months since taking over Mankind in April of last year, we've launched 2 proprietary brands, one called Kind Republic and the other called Dank Space. Kind Republic occupies the lower tier in terms of quality and price, and Dank Space occupies the highest tier of quality and is sold at a premium price. Since we launched Kind Republic, we've also launched under that brand pre-rolls, concentrate, and soon vapes. And in the short time following its launch, Dank Space has become the highest seller in our store, outselling the next highest seller by 3 times. Last year, Kind Republic sold almost $2 million through our own dispensary, and our proprietary brands garner an average of 70+% margins. Our strategy is to grow the brands in our own proprietary stores, and as we grow the number of stores, our brand will grow alongside. But we do have, of course, the opportunity to sell into third-party dispensaries, which is something that we are looking at. We've also cut costs of about $3 million, primarily from SG&A. We've simplified operations and made people accountable. We're still finding operating efficiencies and expect to continue to generate additional cost cuts in 2022. We've restructured the delivery business and have grown it by almost 20% in the time that we've focused on its growth. Our target is to grow it by 30%, which means an additional $1 million in revenue coming from the delivery side of the business. As I mentioned, we shut down our low-margin distribution and manufacturing businesses to focus on our higher-margin retail operations and our proprietary brands. In so doing, we've written off or settled accounts payable of $2.7 million, strengthening our balance sheet and improving our margins on a go-forward basis. We've also strategically re-merchandised to influence consumer spending, and we've grown our average ticket by $2. We've also implemented a data-driven marketing strategy, and we've increased our interactions with consumers by doing that, customizing our messaging to make it more relevant and interesting to them. There's no point in sending an email about a vape if you're an edible consumer, and vice versa. We've implemented an ESG strategy. ESG stands for environmental, social, and governance. And it is a factor that investors are looking at to make investment decisions. We are highly focused on ensuring strong performance on this front. On the environmental side, we've implemented policies to reduce waste, and we've committed our proprietary brands to biodegradable packaging. We've also amplified the voices of charities that we work with, which promote sustainability. On the social impact side, we've partnered with charities that are meaningful to our customers and community, including charities focused on women in need, military veterans, and also the Last Prisoner Project, which is a project to free people convicted of victimless nonviolent cannabis crimes. We're also a founding partner in a program called Freedom Grams, which packages and highlights stories of real people who are still in jail for the same amount of flour that is in the package, which today is sold legally. On the governance side, we focus on diversity, equality, and inclusion. And we're proud that 60% of our board and 50% of our managers are women or people from visible minority groups. So I told you at the beginning of the presentation that we believe GABY is undervalued and forms a good investment opportunity. I'm going to move the floor to Alex and ask Alex to present the current investment opportunity in GABY. Alex?
Thanks, Margot. Can you hear me okay?
Yes, we can.
Perfect. This is the cap table. It's pretty straightforward. It's basic shares outstanding of a little over 700 million. RSUs, there's no in-the-money warrants for a fully diluted in the money outstanding, 747 million. Market cap of 18.7 million, 35 million of net debt, 25 and a half, 30 of which is it, I apologize, I think it's 7-year debt that we received from Mankind upon the acquisition. It's 10% coupon with payments set over a certain time frame over 7 years, which is a remarkable piece of debt that nobody could get from a perspective of cost unless you're a really big MSO. We're really, really happy with that structure just from a cost of debt perspective, especially in this market. So we have a fully enterprise value of 53 million. If you look on the next page, which is our cap table, understandably, there's some bigger market cap companies on this table. That's fine. There's not a lot of direct comps from a junior perspective. But even if you take a discount to some of the bigger comps, we still believe we're strong value at these types of revenue and EBITDA multiples, especially going into 22 and 23. Most recently, GABY, we are one EBITDA positive, and I think the last quarter, if I'm not mistaken, we had positive net income, which again for a smaller startup, high growth emerging company is fantastic, especially in cannabis.
Thanks, Alex. So to conclude, we're a high volume dispensary with revenue of 25 million, or 3.5 times the average that a dispensary in California does. We're retail expansion gurus with one of the best teams in cannabis. We're experienced in retail operations, in consolidations, in implementing growth, and in franchising. We have a single goal, which is California dominance. And we've pointed out that California offers a unique opportunity. And as Alex points out, our shares are undervalued. GABY accounts for 5% of California's total legal retail cannabis sales, yet our shares are still highly undervalued. So I hope you've heard me talk about GABY having the right foundation in Mankind, having the right opportunity, having the right team. We're definitely primed for growth, and I hope you'll be a part of it. We can now turn to Q&A.
Great job, Margot. We do have just a few minutes, so I want to get these in quickly. A question from Al Francis saying, knowing GABY has a good eye for spotting potential accretive acquisitions, can you speak to what you look for in potential acquisitions? Also, why you chose Mankind?
So just like any retail operation, we focus on what makes a retail operation successful, which starts with location. We also look at the opportunity for enhanced signage. We look at access. We look at population base around the retail location. We also look for EBITDA. We like dispensaries that are EBITDA positive or have a path towards getting to EBITDA positivity. We also like companies that are fat. And what I mean by that are opportunities to cut costs and to streamline operations, because we really understand how to do that. Mankind has a great reputation and has a really strong operating platform. It was very fat, as you could see by us having cut $3 million out of the operations in a year of having owned it. So, as I say, it's the same things that you'd find in any retail operation or that you'd look for in any retail operation. And then with EBITDA positivity or a path towards EBITDA positivity.
Thank you for that. Jean Baker wants to know, since you closed down manufacturing, how do you track quality control?
So we partner with manufacturers that have got strong reputations. And what we've found is as the industry matures, the verticals get more and more sophisticated. So we have to test our products before they are manufactured. We test the raw materials. And then after the products are manufactured, we randomly select products for quality assurance and for further testing. So far, that has worked for us.
Sounds good. Last question to close this up. It's compiling a few of our questions. Daniel Smith and Alyssa Blake want to know, with all the cannabis companies out there, what makes your company stand out, and what is your major distinguishing factor?
Well, I think it comes down to management, but I'm going to ask Alex to answer that question. Alex, are you still with us?
No, of course I am. Yeah, it's 100% management. When you're looking at smaller, emerging, high-growth companies, you need management with a previous track record of success, cap their own capital in the story like Margot has. And it cannot, there's this business, this industry has had a lot of shiny objects thrown at investors. And we've had small junior companies come out and say, hey, we have the ex-VP from Procter & Gamble. Great. Like Procter & Gamble, what does that individual know about growing a company using capital efficiently? So it's all at this level, 100% about the team. And this is by far, I mean, Margot spoke to it. When you look at the presentation, anyone can look it up. This team has had a remarkable track record of success, specifically in retail. And retail is as Margot tells me, I'm not in the business, but I've spent a few years working with Margot. It is a very, very, very difficult business in the best of times across other sectors. It's exacerbated as with an industry like cannabis, which is an industry that's new as well. So management is the 100% first thing that any investor should look at when looking at high growth emerging companies.
Thanks, wow. Alex. And just to close off, Alex suggested that I had money in the business. I've got $8 million of my own capital invested in GABY. And I'm highly motivated for that reason, as well as for the legacy I want to build for my sister to grow this business and succeed.
And sorry, I'll finish. I urge anybody to find any other, there's one or two I know that are out there, but it is maybe less than 0.1% of management teams that have that much capital invested in their own enterprise.
Well, thanks, thank you, Alex. Guys. Great presentation, fascinating stuff here, and we would really love for you to come back and give us some updates with GABY in the near future. Thank you all for your time.
Thank you. We'll see you in the future.
All right.
Bye-bye.
Thanks, everyone. Okay. Stay with us. We'll be coming right back.